prepare for downtimes. Uh, Certainly take advantage of good times, but be conservative and only pick the best deals. So if you're the one that can prove that you can close and prove that you can at least hold your investors' money or provide them a return, they'll come back.
Tim is one of the most authentic and genuine people I've ever met.
Sincerely believe he's coming from a position of giving, and that means a lot.
You're going to make huge progress.
Well, welcome everybody to today's Capital Raising Show. I'm your host, Tim Mai, and today I have a super special guest. He's been around the real estate investing for a long time. Dr. Tom Burns is an entrepreneur, retired orthopedic surgeon, and a physician to the United States ski team. He has over 25 years of real estate experience and has acquired and developed over $730 million in real estate locally and internationally. He is the co-founder and principal of Presario Ventures, a private real estate company focused on apartment development and private equity in Texas and the Sunbelt states. Dr. Burns is the author of Why Doctors Don't Get Rich, a best-selling personal finance book for those who want to live life to the fullest. He's a sought-after speaker and mentor and has been financially independent for over a decade. He is the founder of the Rich Life Mastermind, created to help people create financial independence so they can control their future and travel to exotic places with him. Let's give Dr. Burns a big welcome, y'all. Woohoo! Tom, are you going to take us with you to some of these exotic places?
Man, I'd love to. Man, geez, I'm like insecure in this group. This is a great room here. So I don't know if I qualify to hang out with all of y'all. But yeah, let's anywhere. We'll all go somewhere.
That's awesome. So where are some of the places that you've taken your mastermind members to?
Well, I'm just working on getting them out. Scottsdale's the next location for them. So I thought I heard somebody was out there in Arizona. I've so far just taken them to the exotic location of Austin, Texas, but it was good for them. So yeah, we'll probably hit Arizona and then offshore for the next one.
Gotcha. That sounds exciting. So yeah, if you can share with us, how did you get started in this real estate investing journey, especially in this multifamily apartment space?
Yeah, it all kind of happened organically, probably by mistake, probably just lucky. I grew up. I grew up as an athlete and was pretty good at what I did. But as I tell everybody, there's levels of good, right? So nobody was ever going to pay me for it. So I decided go into orthopedic surgery and be a sports guy. So I did that. Went to med school and then went into residency. John knows this deal. It's like 5 years and then there's an extra year of fellowship. So I was in the middle of that doctor training, and we're trained by the apprentice model. You're trained by people that are 10, 20, 30 years ahead of you, which is a good model, mentorship model. And I was watching the guys that were supposed to be me in 20 years, and I didn't like what I saw. They were in the hospital late at night. They were, complaining about not having any control. They couldn't hold on to their marriages. And so either through blind luck or a little touch by an angel, I just finally decided I didn't want their money if I had to have their life. So I started looking for something else. And I looked at a lot of stuff. I looked at going into administration, wearing a suit, carrying a briefcase, because that looked kind of cool. And that turned out to be a job. Didn't have enough time or money to do the stock market, didn't have the chops, the time, or the money to create a business. And there sat real estate, nice and slow moving, where I could do it with partners, part-time, things like that. So I sort of got into real estate by default and built the two businesses, professions, what have you, together. I went in, started playing doctor as a private practice physician. And when I finished my day as a doctor, I changed hats and turned into a real estate guy. And so started small like everybody else, and just things gradually grew, got partners, and the project got a little bit bigger. And now here we are today, and got a company, got people doing things for me now, which is a lot nicer than the early days. But that's kind of how it all started. Just a natural progression of finding something that worked and finding something that created income when I didn't have to work for it was really addicting. And so I fed that addiction for the last 25 years.
Gotcha. And when you first started, did you invest passively and learn through that route, or did you join any mastermind groups or mentorship and went straight into doing active?
This was kind of a long time ago. I don't want to say, I was riding a horse to work or anything, but, Al Gore had barely invented the internet. So there weren't, there were, and the laws hadn't changed. So you couldn't find deal. Guys like me it was hard to find deals to invest in. So I didn't even know they were out there. There weren't mentorship. I'm sure there were programs, but they weren't readily available. So all I did was find a piece of real estate and bought it. So that's where my education began, because I didn't know what I was doing. So I bought something and didn't know anything. And the guy showed it to me and said, well, you got to get a loan. I said, how do I do that? He said, well, you go to a bank. And so I went to the bank, and the bank said I had to put money in too. So I did that. And then I got mad because he asked me for tax returns and financial statements, and I didn't have that stuff or understand any of it. So I did all that, learned how to do it, eventually closed the deal. It made me a couple $100 a month in passive income. That was pretty cool. So
That is cool.
I like
And
that.
yeah, that's awesome. And then when did you start? When did you did your very first syndication deal?
So from that first one, I liked it. I asked for more, and the guy just, we started buying more. So I bought a bunch of those things. I bought student condos is what they were. Bought a bunch of those. And then the projects got a little bit bigger, and I ran out of my money. So I just went to friends and said, look, I got a good deal. And so I started syndicating then, and just figured out how to run the deal, did small little deals first. And then around about that same time, I built a hospital. So I brought in doctors as investors. So I guess we syndicated that. And then, then the real estate projects got significantly larger. We started building. So that's when we started raising more money.
Gotcha. Okay. Now, back then, I would assume syndications back then is very different than it is now, or?
Yeah, it was, the first big apartment syndication was like in 2008 or 2009. I tell people I still got scars on my knees from begging for money, because that was during the Great Recession, and people pretty much clamped down hard on their wallets and weren't investing. So in those days, you went personally, you took a printed operating memorandum and showed them the book, described the investment, crossed your fingers and hoped they'd invest with you. So that's how we did it back then. It's gotten a little bit more automated.
Well, so let's talk about that. So for you, it was challenging to raise money during the last market crash. With this upcoming market, what are you seeing, or what are you foreseeing that it's going to be with, where the market's going, and also how challenging it might be to raise money in this upcoming market?
Yeah, we see it in our business. We've got a large investor list, and used to be we could raise a certain amount quickly, usually in a day or so. So we're finding that's taken a week now instead of a day, or something that took a week might take a month. So people are not as readily investing. I think there's still a lot of money out there chasing deals. So, we still seem to find that we still seem to make the raises pretty easily, but when it'll change. I just think it's going to change. When things feel a little worse, people are going to get a little tighter with their money. They're starting to have layoffs. Austin's a big tech town, so with Facebook, Google, Apple, all of them, they've all laid people off because the tech guys usually go first. They move fast. And so there's less people with jobs. When somebody doesn't have a job, they don't think about investing. So I think there'll be some headwinds. We've just seen light winds so far, not heavy headwinds yet, but we're certainly prepared for it.
Gotcha. So what would you say some of the best ways? So let's say, we're going to get hit hard. And so what would be the best way to navigate through a time like this, especially around doing deals and raising money for deals?
Oh, so two answers. I was gonna thought, I mean, it's good to have cash and good to have non-recourse debt, or low LTV on your recourse debt. I think if you're raising money in an environment like that, you have to have a really good deal. Has to really, has to have a lot of wiggle room for mistakes or downturns in the market. So that translates to, higher equity raises with lower LTVs. Obviously, you want to fix your debt. I'm in the development world, so we have difficulty fixing our debt for, first 20 months or so. And so, just think, be prepared for things to go bad. They can go bad quickly. There were times when I saw 2 or 3 months free rent and a free flat screen TV if you rented an apartment. So that really cuts into your NOI. So prepare for downtimes. Certainly take advantage of good times, but be conservative and only pick the best deals. So if you're the one that can prove that you can close and prove that you can at least hold your investors' money or provide them a return, they'll come back.
That's great. And then in terms of the investor profile, like you said, the tech space, a lot of them are going to be laid off. So they're going to be less likely to invest. Would you, with you being a physician, I'm sure a lot of your investors are probably also physicians. And so that market won't be as affected as much, would you say? Or I guess it's a two-part questions. Number one, do we as syndicators needs to focus on certain segments of certain avatar that might not be as affected during the downturn?
I guess it would help. And, it's funny you talked about the doctors. I actually didn't let doctors invest with me for the first 15 years. That's another story. Now we do have a lot of doctors, but we finally brought them in. I think you just need to, continue to let everybody know that you have deals. You continue to enlarge you need to continue to enlarge your network. Because each industry is going to get affected differently. You never know if the tech folks will have money. There's people that have had exits from their companies. They've got money to invest. Docs and attorneys typically still have discretionary income. That I think going broad and just letting people know, just educating people, letting them know you have opportunities, they'll filter themselves out.
Gotcha. That's actually a good idea. Yeah, because I have some friends who they primarily raise money from Silicon Valley, and so for guys like that, probably do need to go broader.
Yeah, it's always nice to have options. It's great. It's like having an institutional investor. It's great to have somebody that writes one check, but maybe they don't come back for the next one. It's nice to have a lot of options, multiple investors sometimes.
Right. In terms of, I know you do a lot of new development. How is the environment for raising money for new development versus existing structure value add?
Yeah, there's different investor profiles. Some folks want relatively immediate cash flow. Some folks are cash flow investors. That's me. I'm kind of a cash flow investor still. So it's typically a part of somebody's portfolio. They've got the cash flow investments over here, and then because the development takes a couple of years, takes 2 years before the cash flow starts happening. So you need to kind of invest, forget about it, and watch the construction happen. I forgot the other half of your question, Tim.
Yeah, well, just the differences between those two type of raises, new construction versus value add.
It just depends on investor type and investor preference. The best way to raise money is to ask somebody what they're looking for. And so if they want cash flow, either have a cash flowing deal or we send them to somebody that we know does good cash flow deals. So it's just investor preference. And often we find it's a hybrid. People will want the returns of a development bolstered by the consistent cash flow of an acquisition or something that cash flows. So it's just part of a multi-pronged investment strategy.
I see. Okay. And then into your development, are they all in like AA plus type of areas, or what?
No, that's a good question. We stay out of the urban core, so we don't compete with the Trammell Crows and folks like that. We're sort of secondary market folks. So on the periphery of Austin or in between Austin and San Antonio, all of our stuff, currently all our stuff's in Texas. We divested out of the other states and we do look at Florida, but as far as my holdings are in multiple states, but Presario's holdings are all in Texas. And so we build a variety. We have very nice luxury, Class A plus properties. We've got nice podium wraps and multi-story offerings. And then sometimes we'll build in a smaller town and it's all Class A. It's very difficult to build Class B because the lumber costs the same, but little simpler build, little smaller pool. And we've done that before too, where we kind of you build to the community. So it just depends on the community and we take that into account.
I see. Okay. You mentioned that doctors is now a big part of your type of investors, I guess your avatar. What would you say are like your top 3 type of investors that you have? What professions are they in?
Ours, golly, a lot of high net worth folks. Probably, I don't know if I've ever done those demographics. They run businesses, they're attorneys, they tech people. Some folks are just investors, they've exited from their business. Some of them are family offices and quasi-institutional folks. So, I guess we have we do have more physicians investing now that we've brought them into the fold over the last 5 years.
Mm-hmm. Right. Are you still, you've been in this business for so long, 25 years. Are most of your investors are now word of mouth referrals, or are you still actively out there growing your network and like actively marketing for them?
That's a great question. We've never been very good at marketing, so it's always been just us networking, my partner, myself, or me, and then we utilized a little bit of social media without actually in-house, just posting stuff here and there. Actually spoke to a marketing firm today. So, we're always out there. I always found that in investing, it's great to go out and network, and just in life, it's great to go out and meet new people because you never know what's going to happen. Sometimes people turn into investors, or there's somebody you invest with, or there's somebody that you go out and, go bowling with or have a beer with or something. So I think the best way to grow your network is to go do stuff, get off the couch and go meet people.
Yeah, that's really good. So what are some of the some of your favorite places to go to network to find potential investors? What type of events that you go to?
Well, I don't usually go to find investors. I don't go to find investors. I know that's a strange answer. I typically go to get educated. I'll go to seminars and I'll go to learn myself. But when the best part of any seminar is not what's on stage. It's typically what happens at the breaks and at lunch. And so that's where I'll tend to meet people, and folks ask, what do you do? And, eventually it gets around that. They'll ask if they can be on your list. And so that kind of happens. But I want to stress, I'm not there for that reason. It's just, it just happens. And that's sometimes a good way to go raise money. Is to sorry, my cat wants to get in on the game here. But you never want to. I certainly it's always in the back of your mind, but you want to go to meet people, and you want to go to always improve your own personal development and education. And a good byproduct might be that you pick up some investors doing that. You certainly wouldn't want to I'm sorry, cat's gone. Yeah, you don't want to, you always want to have that investor list thing kind of as a second, as a byproduct of
Mhm.
just meeting people and doing life. I know that sounds real floofy, but it works best. And I'm in some groups that, again, I'm in a group called Tiger 21. It's a great guy. I learn a lot of stuff there. Guys want to invest with you and you invest with them. And so, I'm usually looking for stuff I can go put some money into. And so when you do that, you end up people asking if they can be on your list too. It just grows. And then they tell their friends.
Gotcha.
Tim said you've got some pretty good deals. Do you take new investors? Sure, more is better, right? So we continue. We've got 3,000 of them, and we continue to add every day. So just get out there, educate your investors, meet new friends, educate people, meet new friends. They'll become your investors.
That's great. You mentioned Tiger 21. So if you have to compare Tiger 21 with other groups that you might be in, would you say that that's probably, like, in terms of for the group itself, a group that you raise the most money from, compared to other groups that you might be in?
Oh no, I don't know if I've
No.
raised much of anything. A little bit from that, a little bit from Tiger. It's not been a long duration.
Oh, okay.
And it's more business, a lot of business in there, a lot of tech, a lot of business, a lot of exits. I think we've raised the majority of our money from our list, but you got to realize some people on our list have been there for 20 years. So
Mm,
we just say, hey,
right.
we have a project coming up, and somebody says, oh, okay, I want 500. And that's before they know what the deal is. It's just because they understand what kind of deals we do all the time. And so that's where we've raised most of our money. It started as friends and family, and then turned into a reasonable sized investor list that I guess likes what we put out, because they keep coming back. It's hard to get new investors into deals.
Yeah. So you're hiring on this marketing agency. Do you mind sharing, like, what type of marketing are you planning to have them do, or that they're doing for you?
Yeah. I mean, we put out information on our website. We put out a blog, always education. We founded the company on education, right? So
Mm,
and that's how you raise the best money. Educate people. They'll tell you what they want.
mm,
So we put out blogs and articles that are helpful. We have somebody in our office who's not a marketing person who posts something on LinkedIn or Facebook like once a day. And so I think this group is going to, I think we're going to go just a little broader, because we're going into the fund model in 23. And so though we have a relatively large base, I think they're probably just going to boost some of the social media. We told them no balloons, no firecrackers, none of that stuff. Nice, simple education marketing. People will come to you. Probably upgrade or probably increase the amount of content, because the content we put out truly comes organically from my partner or myself. So they'll probably help us boost that content. So that's about as much as I know right now. We'll see. It's the first time we've ever hired a marketing company. So we'll see. It's a 6-month test, and I'm being pretty transparent here that we're gonna try it. We'll see what happens.
gotcha. And then you mentioned about fund. I'd love to hear more. Is this your first time doing a fund?
Well, I myself have done several funds, but Presario, my company, has not.
Okay.
We have traditionally raised deal by deal. It might be a $25 million raise, or it might be $5 million raise. We just raise deal by deal. So, but particularly into the environment we're going into, it's it's helpful to have cash available. Helps you get deals, and helps you get preferred terms on deals if you can show that you got $50 million sitting in the bank ready to go. So that's why we're going to do that. And we've also migrated into a related but different asset class to multifamily, and those we're building 6 or so buildings at a time. So that's going to fit the fund model pretty well.
I see. Very cool. And so how big is this fund going to be?
We're trying to determine if it's going to be 50 or 100 million, because the typical tranche for what we're going to raise for is about $20 million. So, if it's 50, that's only two and a half deals. So we haven't decided yet.
I see.
It's going to take us 3 months to set the fund up. We start January 2nd.
I see. Okay. And then in terms of your business model, I would assume that it's the same business model that you have right now. So when you go to talk to your investors about your fund, they have a pretty good idea of the type of investments you're going to do based on your current track record. Is that correct? So it's not
Yeah,
so
it is. And in
blinded for
fact,
them.
just say that again.
I was just saying, so that way it's not so blinded for them, right?
Right. And so this is a slightly new asset class. So like I do if I raise money for something, I typically invest in it first, or it's somebody I've really known for a long time. So we raised individually for one 6-pack of these buildings. So it's all sitting on its own. So they will have tested it already, and it was great response. It was great response. Did not take long to raise for it. So they will have seen it before, and now it'll be a fund that's going to be for, no telling how many locations for this particular asset product. So yeah, they'll be educated. And we started months ago educating them on the asset class. So that's another thing for your investors. We started long before we had the deal available. We started teaching folks that, hey, there's something out there besides multifamily or single family or storage or industrial. Hey, have you ever thought of this? And so they were kind of spun up already.
Right. Do you, in terms of education, I know you mentioned blog posts and articles, do you do webinars to educate your investors as well?
Yeah, we do. If it's for each deal, we'll do a webinar. Got to run through the operating memorandum.
Well, not just a webinar when you're raising money for a deal, but just an education webinar as part of your education.
We have.
thing
Yeah,
that
I
you
guess
do.
we have done that a few times. Yeah, my partner and I sit down at a desk and we'll do a live webinar, take questions. I think we did something when COVID started, kind of talking about the state of the market. We did something when the interest rates started going up. So yeah, we do that occasionally. People like to catch you live and ask questions.
And then do
Haven't
you
done it
send
a
out?
lot.
Okay. And then do you send out any type of newsletters
Yeah, we send out a newsletter every month.
every month? Okay. Is that
Yeah.
emailed or is that all physical?
It's email.
Okay. Okay, great. What are some of your favorite tools that you use in your business?
These guys right here. I try to listen to what somebody's looking for. It's not always something that I have available, so I'll point them to somebody I've trusted over the last 10 or 20 years. But beyond that, it's really just getting to know people. That has been the best tool, because who do people invest with, right? They invest. You've heard they invest people like, and trust, right? So the best tool has been actually getting to know somebody and not bringing up investment in the third sentence after I meet them. So often I don't even tell them what I do. I just, like to get to know them. So beyond that, I guess that's the philosophical part, but that's the best way to raise money is get to know people, educate them, give them what they want, and then produce, deliver for sure.
Right.
Email and email. I was going to say email and social media, podcasts, things like that, but geez, I do everything. I was actually raising money for a separate project this morning. It's all by email. So I live by that.
Okay. Do you do your own investors relations, or do you have someone on staff that does that?
Yeah, for Presario, yeah, we've got an investor relations director. Her name's Robin. She's awesome.
Awesome. Okay. And then in do you
But yeah,
in
Tim,
terms
I
of
will say, I'm sorry, I mean, I will say, Robin's our investor relations director, but they can always get my partner or I, no matter how big, they always get us if they want. So they don't often because she's awesome, but we make ourselves available all the time.
okay. Now, in terms of you and your partners, I'll go into that. What role do you play, and what role does your partner play? I'm just curious how your business structure works.
Yeah, he's in operations because I hate operations. So does he. We're both bad at it. But he's less bad at it than I am. So, I asset management, marketing, overseeing underwriting, believe it or not, I'm a numbers guy. And so it's mostly my role is mostly strategy, a lot of investor relations, oversight of asset management and underwriting.
I see. Okay.
And I do,
And
yeah,
then
I do the financial stuff, all the accounting stuff and everything. We've got an in-house accountant, but they report to me, which is, it's boring, but it's got to be done.
I see. In terms of raising capital, do you only raise money for your own deals, or do you co-GP with others on their deals at all?
Yeah, no, both, absolutely. We used to only raise money for our deals. Then we did a lot of co-GP deals, and probably our shop's turning more into more private equity than operator. We often now have a partner that does the operations.
Mhm.
That's with Presario, and then I typically will co-GP with other people, outside of the company on other things. So it's nice to have partners. It's difficult to, you got to make sure you got the right partner. So we hit some foul balls a few times with Presario, and so now the way we do it is we tie up the land, we buy the land, and we bring in the partner that we want to bring in on it. Previously, we'd come in and sometimes helped some other developers, and a lot of times it worked out right, and sometimes it didn't. So we make sure we control who we're partners with.
I see. So are most of your deals on new development now?
Yeah.
Okay. I see. And what would you say? I know you mentioned in our communication exchange, you don't actually track the amount that you raise, but if you have to guesstimate how much money you've raised for all the projects you've done, what would you say that number is?
Oh God. I think we raised 100 million last year. We're going to do 100. This year. I mean, we got 150 slated for next year. So if we look back, I don't know, 200-300.
Okay. Yeah,
Probably
that's
closer
all.
to 200. Yeah.
Okay. Gotcha. Okay. Well, good
I'm
to know
only
that.
interested in the return. Sorry.
No, that's good. I love it. So if you were to do it all over again, is there anything that you would do differently?
Golly, no, I always answer this one way, saying I wouldn't change a thing because it brought me to where I am, and I'm blessed, grateful, and happy to be where I am. I was sort of the poster child for attention deficit, so maybe a little focus might have helped
Mhm.
in the past. I was also, and I talked to my mastermind members about this. I intensely focused on cash flow. If it was a capital appreciation deal, I typically wouldn't look. I wanted that cash flow until it covered my orthopedic income.
Mm.
Once it did that, I kind of kept that philosophy, and I think once in a while putting some quote risk capital into some capital appreciation deals, or risk reward higher return deals, knowing some of those might not do well, I might have done a little bit more of that. Because when one of those does pop, it really kind of accelerates things.
Mhm.
Pretty happy with where I am, but that's probably something I might have done a little more of. A little
I
more
see.
early stage company investing, things like that. So I'm doing a lot of that now.
I see. Okay. And then, so what, there's a number of us, including myself. I'm fairly new. I'm not new to real estate investing. I've been in real estate investing for 20 years, but I'm fairly new to the syndication space. And some of
Right.
us on the calls are also that way. What are some of your tips or advice that you'd have for us?
Okay, just stay in groups like this. This is people always ask, how do I get started? Get educated and get into a network. So you're already doing, well, you're running it, but that's a great thing to do. And the fact that you got you got all that experience in real estate, that's going to translate well. And so if you're having trouble raising for a deal that you're doing, just partner up with people. Partners are great. I've always used partners. I contend they're all smarter than I was. And so it's nice to work with partners you combine lists, it builds your lists bigger. It makes it, the bigger your list, the larger tranche of money you can reliably raise, and maybe the larger projects you can start attacking. And then you can do that on your own over time, but partnering up helps. Keep going to things, go to seminars, go to meetings, go to learn. But like I said, that you'll meet people there. Get out on the podcast trail if you've got a good story, people will contact you. So it just grows. It grows organically. And, I know everybody on this call is just like me. You want it to happen now. That's what I wanted. I always wanted to, I want the results now. But, that deal, Bill Gates and probably somebody else said we overestimate what we can do in 1 year. We underestimate what we can do in 5 or 10 years. So if you just stay the course and keep adding people, or ask your investors, hey, do you know anybody else that might be interested in deals like the one you invested in? Things will grow, and it grows kind of like this, and then it takes a pop like that. So
I see.
Hang in there, meet lots of people, be transparent, honest, and do good work.
That's awesome. I love that. And then what, you accomplished a lot in your career. Do you have a big goal that you're going after? What's your vision for what's next for you?
I want to visit every country in the world. So I'm trying to knock them off as fast as I can. Got an invitation to Georgia the other day. Anybody know where Georgia is? It's like Russia prime,
Okay.
So, but that's my goal. It's going to sound good. I don't have a monetary goal. I had one, and it was having a passive income to cover my lifestyle needs. So I never really knew what my net worth was until people asked for it to underwrite a loan. So those are not my goals. And, okay, so I would like to have my own private jet because I like to travel. So I want the jet not to stand in front of it and do a Facebook picture so that I have a jet. I want it so I can get to where I want to go as quick as I can. So it hadn't happened yet. So that's my one tangible goal, I guess.
Right. I love that. And I know, I mean, when I was reading up about your Rich Life Mastermind, that's one of one of the things you want to do with your members, right? Take them to exotic places. And so share with us about this mastermind you've created.
Yeah. So it happened by accident. It's probably like my real estate career. So Kiyosaki suggested I write a book, right? So I wrote a book, and I wrote this Why Doctors Don't Get Rich. And, prior to that, I would always take phone calls from folks and wanted advice and wanted, to do things. And I always had students, and I'd teach them a little medicine and mostly finance while they were with me, and so that was always kind of fun. Well, once the book got written, I was getting calls from all over the world, and things in like 15 countries now. And so there were a lot of people that wanted to connect. And, a friend of mine said, hey, you ought to maybe set up something formal. So I set it up and told the initial group that you guys are going to teach me how to do this, and we'll see if we both have fun. And so it's really been a blast. And so it's really designed to create the community and the environment where everybody can help each other to get where they want to go. And then the education, I teach them what little I know, but I bring in experts. Like we've got a well-known CPA is going to talk to us, next week. I'll bring in experts and kind of lots of asset classes and insurance and basic things. And then what they really wanted, that's what they wanted, lots of education, and they wanted deal flow. So that's the one thing that I see a lot of, through Tiger, through R360. I'm in quite a few groups that I get kind of early access to deals that people don't see. And so these are vetted deals. And so they wanted deal flow and they wanted education. So we bring it all together. We have a good time, but I promised them it's taglines, people, deals, and adventures. Because I think you don't have any fun in life or get where you want to go by yourself. We're not an island. So we all want to be with other people. And the deal part is what they wanted, and the adventure part's what I want. So we're all going to do all this together. So it's been a blast. Been a blast.
I love that.
And we're bringing in deals that you would never see. So, and most of the deals pay for their membership fee the first time. So there's a lot of, you'd be surprised what kind of deals there are out there in the ultra high net worth world.
I love that. So, we're going to wrap up this part of the interview. For the folks that want to learn more from you, learn more about your mastermind, possibly invest with you, do deals with you, where would you like to send them?
Sure. Two places, I guess. You can go to the website. It's rich.life. And actually, if you go to rich.life/toolkit, there's some stuff there that I've used over the past bunch of years to kind of help me get where I am. It's like free gift kind of thing. Or you can, simple way is just email me at tom@richdoctor.com.
Okay. And all right. Isabel, can you type in the link in the chat, please? rich.life/toolkit. And then you said your email was, do you repeat?
tom@richdoctor.com.
tom@richdoctor.com. All right, great. We'll make sure that that's in the chat for everyone there. What's one last words of wisdom you'd like to leave us with today?
Just don't look at Facebook too much. Don't, just keep pressing. You'll be surprised how much progress you're making each day by being in groups like this and listening to talks and talking to people, educating yourself and moving forward every day. It'll compound. There's a book Darren Hardy wrote called The Compound Effect. Talks a lot about that too. Just keep putting one foot in front of the other, and you'll be real surprised when you look back a year from now or several years from now.
Awesome. All right. Dr. Burns, thank you for doing this interview with me.